Today we had a weird question, and it's worthwhile to explore about it. That's Fed rate cut and how it can impact on the mortgage rates. So actually, the mortgage rates always decided by the 10-year Treasury bond rate. So when it's come down, there's always highly chances to come down and cool down in mortgage rates. So it's how the Treasury bond rate comes down based on the Fed rates and some more other external economical factors. So there's always correlation between these three rates. So how it can impact on individual level. So we'll go directly to an example how it can work. So let's assume we are in 2020 and you're getting a salary of like $10,000 per month. So annual salary will be $120,000, and you're gonna buy a house which is estimated price of $500,000, and you're going for mortgage, and you're paying like 20% down payment, 100,000, and balance 400,000 mortgage on the current rate in 2020, like 2.8% somewhere. Based on that, you are paying a mortgages for that 400,000, where the sum coming like $1,600 on your salary, which is a percentage of 14% on monthly salary you are paying mortgages. So that's the story in 2020. But in 2025, it's so different. Housing prices increased to 50%, and the mortgage rates increased to 6.8%, and salary increased to 20% average, and statistics departments actually. So it happens. So let's say same person in 2025 gonna buy a house. So that 500 becomes 750, right? And the salary became 144,000 per year, right? And I think 6.8 percentage right now the mortgage rate. So it will be end up like $3,800 per month, right? So that will be like 34% from his salary. So the cost of borrowing mortgages is very high these days. So that's why the Fed rate cuts and the pressure for cutting the Fed rate is right now happening. So which can cool down the mortgage rates, and actually the salaries are not increased in the last 5 years, and the unemployment rates. So we have to identify these three factors: the price level, the property is increased for 50%, and based on these factors, not only just the property 50% increase, because of 750,000 right now, that $500,000 dollar property in 2020. So we have to pay more on the insurance on that, and some expenses on that, which all are getting increased. So this Fed rate cut can cool down this house